Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew, and we'll take you through the next 1 hour of trade. It's been an interesting day of trade, and of course you're seeing from this that we're off the high point of the day for the benchmark Nifty 50, trading with gains of about 0.2%, and we're just above that 25,900. What key levels you should watch out for at this moment? And we're joined, of course, by Ajit Mishra as well as Mr. Chokalingam. Both of them are going to be telling you about the stocks that you should keep on your radar. Gentlemen, good afternoon and thanks so much for taking the time. Ajit, I'll come to you first. On the benchmark and on the Nifty Bank, what are the key levels that you should watch out for? Is it still a buy on dip market?
Good afternoon, Alex. Yes, it's true. That's a buy on dip market, and especially the encouraging start to the week yesterday, and we are seeing the continuation of the move. Though, as you rightly mentioned, that the expiry play is currently undergoing, wherein we are seeing that the call writers are still intact at 26,000 marks, and that's the reason why Nifty is facing resistance across this hurdle. But at the same time, we have noticeable, put writing also at 25,908 strike. So it's going to be a level close around the current area is something that market might end. In the days to come, I believe that the overall tone is like to remain positive, and one should continue with buy on dips until we break 25,550 decisively. And the moment we break 26,000 mark, we'll be gradually shifting towards the record high zones. So as the Nifty is basically maintaining the positive tone. Banking is one main reason behind this recovery or this outperformance. After this strong surge of the gap up that this index witnessed a couple of days ago, we are seeing a very gradual move. So we feel that there could be a bit of a consolidation in banking, while the other sectors on the rotational basis might help the index. But here, any dip towards, let's say, 60,200, 300 zone, that's the area basically where one should look for fresh long positions. 59,750, that's the major support, so that should be the stop loss. And gradually, we can see that 61,500, that is the key level that banking might test. So here also the tone looks positive, but yes, as of now, outperformance slightly higher in Nifty, considering the kind of rotational buying that we are seeing in the other sectors.
All right. And individual stocks that you're seeing at this moment, based on the technical levels, do you have any recommendations?
Yeah. So BHL, here is something that we are seeing after this strong recovery. There was base formation around the major moving averages, and now the stock is set for the next leg of the up move towards 290 plus area. So with stop at 270, 265, one can go long in BHL at current levels. Another interesting stock that we like from the middle basket is NMDC. So it's been almost 1.5 years of consolidation. Currently, we are trading closer to the record highs, a very tight range consolidation in the last 4-5 trading sessions. So it seems like a buying pivot formation before the next leg of the up move and the breakout. So here also you can accumulate at current levels with 79 as a stop loss and 92 as a position targets.
All right. Okay, let's talk about individual counters that you should keep on your watch list. In fact, these are counters that we've had on details. Now I want to drill down on a few stocks with Ajit as well from the broader markets, and some of these reacting to earnings, Ajit, and quite strongly at that. The question is on Bata though, because it was previously gaining about 8%. It's given up quite a bit of that ground. Now trading with gains of just about 3.8%. Is this sustainable, considering that it was so oversold? It saw a pop today. Do you buy into it or do you stay clear?
So, Alex, 2021 November, the stock was at around 2100 mark, and since then we are seeing gradual drift in this stock. Means earlier, at least the attempts were sincere. Means we used to see that 30-40% kind of a rebound that this stock used to attempt whenever we see a recovery. But in the recent months, it completely changed the bias, and extreme sell-off was witnessed, and that has resulted in extreme oversold position, and now the marginal improvement in the earnings is triggering this rebound. But to negate this trend, I feel it's a very long journey. And first hurdle, closer to around, let's say, 1,050, that's a very strong hurdle I feel that the stock might face. In fact, prior to that also we might see a breather. So one should rather utilize this opportunity to exit in case if they are stuck at the higher levels, exit and switch to any of these banking names, auto counters wherein we are seeing strength.
Quick view, Mr. Choklingam, on the footwear stocks, not necessarily only Bata, but Bata, of course,
up coming in for Aurobindo Pharma and Zydus Life Science. Zydus Life Science, of course, impacted on the back of the weaker earnings. But just to put that in perspective, Ajit, I just wanted your views on Eternal. That stock has been doing really well. Anything on the charts, key levels to watch out for?
So yes, Sharad, in fact, it's been like, after several days we are seeing this kind of price action with volume. Means of late we had a couple of days of, rebound, but the volume was slightly on the back foot. Today we have seen a very strong rebound, and we expect this rebound to further strengthen the moment we surpass this 306, 307 hurdle, which is closer to the previous swing highs that we are currently trading. And since there's hardly any resistance in terms of the levels and the OI data also, so it seems like that's going to be a gradual journey towards 318, 324 in the near future. So yes, both from the derivative and technical front, it looks okay to go long in, even at current level after this recovery with 294 as a stop loss.
All right, it's time, gentlemen, to get into the rapid fire round. And Ajit, this is only for you because we'd like your quick view on the technicals based on the stocks that we picked up. And quite a few of these actually in our watch list as well. The first one is Praj Industries, a stock at pretty much the high point of the day, gaining on very high volumes. This is its biggest intraday gain since November 2024. Is this a buy, hold, or sell?
It's a hold.
Okay. JM Financial, the stock is up quite considerably as its peers have declined, and it's up as much as 11% over the past 5 trading days. The volume is more than 7 times its 20-day average. Is this a buy, sell, or hold?
Hold.
All right, Sun TV Network, the shares have risen almost 7% as the peers have advanced, and it's up 12% in the past 5 days. Trading volume also 12 times its 20-day average. Your views on that, Ajit?
Yeah, it's a buy with 590 as a stop loss and 670 position target.
Rainbow Children Medicare shares have seen a biggest intraday jump since July 24, and even the trading volume, that's up 2 times its 20-day average.
Use recovery to reduce around 1300 mark.
Amber Enterprises, the trading volumes, that has picked up 6 times its 20-day average, and the Q3 revenue also, looking at that, jumped 38%, while PAT jumped 128% on a year-on-year basis. Your view on that?
Hold with the trading stop at 7,200 for 8,000, 8,100 is position targets.
So, okay, so very interesting set of stocks. But you know, Sharad, what I was pointing out at the start, and you pointed this out in the newsroom as well, is that the entire textile pack has been under attack commodities because they could be risky. We'll talk more in just a bit, but we have to slip into a very quick break. More on the other side, and we're back to the equity market.